Wealth is goods and services. Medium exchange is the way that we acquire that. Now, that involves the idea of banking. When you're going to buy something, you got to have an accumulation of the medium exchange somewhere. Otherwise, nothing happens. Somebody is going to be the banker. And the tragedy is that it should be you, but people don't realize that. The banking community has totally taken over that function, and as a result, it's made slaves out of the American public. Well, don't feel like the Lone Ranger, though, because the entire world is in this condition.
You just heard best-selling author Nelson Nash sitting right here in my office talking about a great place that we need to be saving money. If you've not read his book, Becoming Your Own Banker, I totally encourage you to read it. I've read this book probably 20 times, and it has revolutionized the way my family saves money and how we grow wealth without the risk of Wall Street. Now, I can't do his book justice in 5 minutes, but I'm going to break down his concept in a very simple way. What I look at and when it relates to savings and how we take those dollars and implement it to create financial freedom. I believe savings is a lost art in our society. As a whole, Americans save less than 3% of all the money that they make. And when they do save money for cash purposes, for either emergency reserves or opportunity funds is what I like to refer to them as, they're saving them in checking and savings accounts. Well, what are the benefits to us? Why do we put money in checking and savings accounts? Well, the number one reason people tell me is that they're liquid. I can access the money anytime I want to, and I feel pretty confident that our banks are safe. Maybe they say that they're convenient or they're normal, but everybody else does it. But what are some of the downfalls? What are some of the things that we don't like about our checking account other than, yes, it's earning 0.001%, right? The return on our money is non-existent. But if it is, we would have to pay ordinary income tax, so the tax would be really high. This is where we're all saving money. This is option A in America where people are putting money. I think there's a simpler way. In Nelson's book, he talks about these specially designed insurance contracts. These are places where people are designing policies for cash and not for death benefit. So it's the opposite of everything we've learned about what we should do with life insurance. I want to show you, if you operate within these policies the correct way, you actually can have a lot of the same benefits. So you can have the liquidity that's given to us, the safety that's given to us by companies that's been around 150 years. You actually can get a very competitive rate of return. You can have the money that's tax advantaged, meaning the money can grow without taxes and actually can be borrowed against in the future without taxes. We also get access to creditor protection. So someone can't sue us and necessarily access this money in addition to a death benefit. Now, there are some negatives. I always point these out to my clients as we go through this. And one of the first ones I share is that they're slow to start. The way we design policies, typically for every dollar we put in year one, we have somewhere between 60 and 70 cents of the dollar available to us that we can use. Now, listen to that. Sometimes people think that's a negative. And I tell them, if you started a business and you could take out 60 cents of every dollar that you put in year one, would you be okay? Every business owner I've been talked to would say, absolutely, that would be awesome. Year two, you get about 85 cents of every dollar you put in access to. After that, and from that point on, for most situations that I see, every dollar we put in, we have access to at least that dollar, if not more. So they are slow to start. But when you think of it like a business, it's not that big of a deal. And the last thing I think of is that they're different. Now, personally, I believe that traditional financial planning has failed us. And so I don't believe that being different is bad. I actually think this is a positive, but most of the people out there, they want to do exactly what everyone else is doing. If you want to do what everyone else is doing, you might as well shut this video off. But if not, if you really are interested in how to be truly successful and do what the major corporations, the most wealthy of the wealthy, are doing, they're doing these concepts. They're putting their dollars in these kind of contracts, not checking and savings accounts. I can tell you that. But this is just the start. Because really, what are we doing? Why are we saving money for any reason? It's financial freedom. We want our money to be growing for us. But how do you really get financial freedom? I steal this line from Robert Kiyosaki, Rich Dad, Poor Dad, when he says financial freedom is really defined when we have more passive income. That's money that we don't have to go to work for. It doesn't mean that it's money that we didn't have to learn about, that we didn't have to educate ourselves about, that we didn't have to put in some amount of time or effort to get, but it's not money that we have to go to work 8 to 5 to receive. We have to have this passive income, and it needs to be greater than our monthly expenses. Are you solving for this formula? Are you looking at this on a daily basis? If you're not, most likely you're going to be like everyone else when they get to retirement, hoping that the pot of money they accumulated is big enough and will last long enough and before they run out and they die. I tell you, this is the freedom point that people really should be looking for. How do I create more passive income than I have monthly expenses? And all we do within our firm is that we take the money that's in these life insurance contracts and we do one of two things. We either buy assets that will produce passive income for our clients, and whatever that cash flow is, we send back to the insurance company because it's the better of the two places to save money, or we use it to reduce monthly expenses by paying off debts. And the same exact cash flow that is now freed up, we send back to the insurance company and we just repeat it. That's really what infinite banking is about. It's about being in control of the function of the money that's flowing through our hands and not just putting money in banks and letting them perform that function for us. If you have any questions, I encourage you to read Becoming Your Own Banker or watch this video 2 or 3 times and call our office. We'll be happy to help you with it.